Hey guys, so we are going to now run over what we call imbalances, IPAs, insufficient price action. Some people call them FVGs, fair value gaps. Now, what are they exactly? How do you identify them? How do you trade them? How do you use them to help your analysis? Well, as we've been discussing, that the banks like to move these markets in desirable directions and into very specific and coordinated areas, right? I'm going to pull back US 30 here. I'm just on the Dow Jones, and I'm going to identify some things for you. So as we previously discussed and identified, structure of this move going higher, we want to first identify the order block, the POI. Where's the last down candle that pushed you up? It's this one right here, right? I'm just going to mark the whole right to the bottom because stop loss always below the low currently, right? Now, that's your order block or your POI, right? Your institutional candle. Something else that's sitting right above it is what we call an imbalance. I'm going to mark it out and then I'm going to explain it and what its purpose is, what it's used for, right? IPA. This blue gap right here, if I zoom into this candle, you can see on this day right here, this daily candle, when price reversed up, it left a really big gap in it. There's no wicks covering it. That is because there were a lot of buy positions opened in here. A lot of buy orders and not enough sell orders to balance the market. Remember, this market, like anything in life, has to be balanced. For every buy, there's a sell. For every sell, there's a buy. It must be in what we call equilibrium. This is not. There is insufficient price action, hence the term IPA, right? With this insufficient price action, there was no fair value, meaning there was no fair sellers. It was all buyers. So we use these imbalances to identify potential areas that the market can come to close them off. You will always notice that imbalances will often be closed off completely or to about 50% of them, because most times the banks want to break back around half of their orders. So when you have a position like this, where there is a POI and there is an imbalance right on top of it or inside of it, you have an ideal trade setup. And if we play out a couple days, you can see price very neatly trades in to this area. And once it does, it reacts and continues to go higher. So upon identifying the POI with the imbalance, we can see that price will often retrace to it to close it off before continuing higher. Imbalances can be found on all time frames, not only the daily time frame. So you can find them on almost everything right down to that 1 minute time frame, 15, 5, whatever you suit yourself looking into. So as you can see, if I just pull into US 30 right now, right up the top here on the 15-minute time frame, you guys see all this imbalance here, these gaps, right? Price has to come back and reach for these levels in the near future, right? And it probably looks like it might want to head up there, currently. As you can see, we are heading there now. So this is, what we can use to identify potential entries into the market, as well as potential targets if ever we are in a trade and targeting a certain area in the market. As you can see here on the daily time frame as well, you can see a massive imbalance here on this little down push. You can see there's a gap right there in price. Price may want to come and fill that off. And then we have the higher imbalance right up here, So potential areas in the market where price needs to sort of come into and do something in. Do we trade imbalances? Not necessarily. Do we use them to our advantage? 100%. So hope you guys understand what imbalances are. And in the next video, we'll run over something else that we use as potential targets.